All right, let's jump right in. Today, we're talking about something pretty big happening in the crypto market right now. It feels like a great divide is opening up, a story about two giants, Bitcoin and Ethereum, and a really powerful shift in how investors are starting to see their futures.
And this headline, it just nails it. You've got Bitcoin on one side, kind of settling in, acting as this stable anchor. And then on the other side, you have Ethereum, which is just building up all this pressure for what a lot of people think could be a massive breakout. That right there is the heart of the rotation we're seeing.
You see, this really shows the split in thinking. The market is basically assigning these two assets completely different jobs now. Bitcoin is becoming the safety net, a hedge against all the economic craziness out there. Meanwhile, Ethereum, that's being treated as the high-growth bet, the one traders are looking at to make some serious moves.
So, let's start with Bitcoin. Let's dig into why the original crypto is being seen less like a volatile lottery ticket and more like a stabilizing force in a pretty uncertain world. It's really starting to act a lot like digital gold.
The whole mindset here is shifting. Instead of just betting on Bitcoin's price to, shoot to the moon, the big players are now using it kind of like they've always used gold. They're holding it to protect their wealth from things like inflation or, when governments make unpredictable moves.
So what in the world is a macro hedge? Well, think of it like an insurance policy for your entire investment portfolio. It's that one thing you own to protect yourself when the big picture, the macro stuff, gets all shaky.
And listen, this isn't just some theory. As QCP Capital points out here, when people get nervous about what central banks like the Fed are doing, the dollar can get weaker. And when that happens, investors run for safety, and right now, that safety includes both old-school gold and, increasingly, Bitcoin.
The trading data totally backs this up. Bitcoin's implied volatility, which is really just a fancy way of saying what the market thinks prices will do next, is pretty low right now. And that tells us investors are planning for stability. They want an anchor, not a roller coaster.
Okay, so that's the Bitcoin story. Now let's flip this coin over and talk about the other side of this rotation. Ethereum. Because over here, the feeling in the market is the complete opposite. Traders are looking at ETH and seeing an asset with absolutely explosive potential.
I mean, the contrast is just so stark. While Bitcoin is settling into its new role as the steady guy, traders are pointing right at Ethereum and saying that is where the action is going to be. There's this growing, really high-confidence belief that ETH is the one that's primed for a major breakout.
So what's fueling all this excitement? Well, it's a few key things all coming together. You've got a huge surge in interest from big institutions, a ton of money flowing into those new Ethereum ETFs, and a lot of buzz around the Fusaka network upgrade. On top of all that, it's still the king of DeFi and smart contracts, and we're seeing a big comeback in traders betting on its price to go up.
And if you look at prediction markets, where people put real money on the line, it's crystal clear. Traders seem to think Bitcoin might hit a ceiling around $120,000, at least for now. But for Ethereum, they think there's a really high chance it's going to blow right past the $5,000 mark. That's a huge sign of where the market expects the growth to come from.
Okay, so we've talked about the two different stories, right? But can we actually see this rotation happening in the numbers? Oh, absolutely. So let's follow the money and look at the hard data that proves this shift is very, very real.
To really get what's happening, we need a starting point, a baseline. Not too long ago, at its peak, Bitcoin's dominance, so its share of the entire crypto market, was a commanding 62%. Okay? Remember that number. Now, look where we are today, 55%. That's a 7 percentage point drop. And look, that might not sound like a lot, but in a multi-trillion-dollar market, a shift of that size means a colossal amount of money is moving out of Bitcoin and looking for a new place to go. And here's what that looks like visually. Bitcoin's slice of the pie at 55% is still massive, of course, but that other 45%, which is Ethereum and every other altcoin, is getting bigger. And that's where all the momentum is right now.
And it's really important to get this. This isn't just a two-horse race between Bitcoin and Ethereum. The money-living Bitcoin is also flowing into other related tokens, especially in the Ethereum and Solana ecosystems. Analysts call this expanding market breadth, and it's actually a sign of a healthier, more diverse market.
Okay, so we've seen the data, we know the rotation is happening, but now for the most important part. So what? Why does this actually matter? What does it mean to have a crypto market where Bitcoin isn't quite so dominant? To really understand that, you have to focus on this one key metric, the Bitcoin dominance rate.
It's just Bitcoin's slice of the total crypto pie, but it works like a barometer for how risky investors are feeling. When that number goes down, it means investors are feeling a little more adventurous. And a falling dominance rate like this? It's a classic textbook signal that we could be heading into what's called an altcoin season. That's just a fancy term for a period where all those other alternative cryptos start to really shine and even outperform Bitcoin.
And just to give you some perspective here, during the last big run in 2021, Bitcoin's dominance actually fell below 40%. We're at 55% right now. So if history is any kind of guide, this whole rotation could have a lot further to go, which could mean there's still a ton of room for altcoins to grow.
So this all leaves us with one critical question looking forward. We see the momentum, we see the hype, but is it built to last? The health of this whole rally really depends on one thing. Is it being driven by people actually buying the tokens, or is it mostly just speculation happening in the derivatives market? That right there is the billion-dollar question the entire market is trying to answer right now.